Hi all, this is Ritesh Malik and I'll be talking to you about how to raise capital and pitch in front of investors. And I have this mnemonic, a strategy called the CRPF strategy. So C stands for clarity, R stands for reach out, P stands for positioning and pitching, and F stands for focused closing. So each of these four can really help you to raise capital and close your deals as quickly as possible. So starting with clarity. So clarity is one thing which is missing in almost 90% of entrepreneurs. 90% of entrepreneurs throughout the globe do not pitch their ideas with clarity. And the reason is they focus on the why or the how first. We need to focus on the what. Concisely focus on and convert your mission, vision statements, value statements into just 6-worded line or a 7-worded line. Be as clear as possible what value and what exactly does your product do. So the first one is clarity. So in my case, clarity was, so at Innov8 we build co-working spaces. So I still remember my first pitch to investors was very confusing. And as Indians, we have this habit of really going out there and speaking shit. We try to sound snobbish and very well learned, whereas we should actually sound extremely simplistic. And within those 6 to 7 words, our idea should be communicated to the investors. So as an example of Innov8, how we pitched Innov8 to the first investor, which was a massive failure, was that Innov8 is a millennial-led new age brand to really help entrepreneurs build communities which are self-help groups, which can really help people to build relationships and businesses over a long period of time. This was such an absurd, non-clear line. So at Y Combinator, my partner Michael Siebel, who's now the CEO of YC, he taught us one thing that completely demystify what exactly Innov8 does in simple English in 6 to 7 words. So we came up with the following line. Innov8 builds beautiful co-working spaces in India. Now this is a very clear line. Every investor in the world who knows about startups will be completely able to comprehend what we do at Innov8. So the first clearer mandate is be as clear as possible. Make sure that you spend a lot of time in scribbling down the ideas, building mission, vision statements, writing a lot about the stakeholders. And the biggest exercise for fundraise is be clear. Be as clear as possible. Hopping from clarity to now R, reach out. The problem is we don't reach out to the ideal investors, and this is a proper sales exercise. When it comes to selling, our first goal is to go to the lowest hanging fruits. And while raising capital, the same rule applies. Go and pitch to investors who are the lowest hanging fruits in front of you, who invest in your industries, who invest in ideas which are close to your industries, who invest in entrepreneurs of your age and knowledge. Know each and everything about the investors you are pitching to. Know their previous investments. Know their successful investment. The chances of an investor who has already had a huge success with an edtech startup of investing in you, if you are an edtech startup, are huge. So our focus, our time should go in knowledge hunting, in information scavenging, and reach out to investors who are extremely close to your or particular domain of value and product. When it comes to reach outs, also just understand that investors are usually extremely busy, and make sure that each and every line of your pitch deck, each and every content piece in your deck should be very comprehensible, should be extremely low in terms of the fact that they should not be putting a lot of time to understand in your pitch, because usually these people will have a lot of work in front of them and they're very busy. Also, at the same point, I would like to mention that make sure your pitch deck, when it comes to reach outs, the first pitch deck should not be more than 5 to 6 pages, and which should be completely concise on the product and the value that you are trying to create, and it should not have a lot of information. At the same time, when it comes to reach outs, You should know how to handle no's, because while fundraising, as in sales, you will see, you will get a lot of no's on the way. Your reputation, your credibility, your reliability depends on how you handle no's. Investors who at first do not invest in you and do not respond, don't be an ass. Always respect their decision. Always make sure that investors who do not invest in you, because either you are not able to pitch them correctly, or there is something wrong within us, than blaming the investors. And at the same time, while reaching out, if an investor says a no, continuously be in touch. Meet them, respect their decision, and make sure you, as an entrepreneur, keep on updating them when you go in the future. Keep on updating the investors about what is happening in the company and what all milestones you are achieving. And do make sure that you keep them updated, because you never know when a previous no gets to a yes in the future round. So we've discussed about clarity and principles of reaching out. When it comes to reaching out, also remember that your reach out should be via trusted connects, because cold calling does work at times, but more than that, I think if there is someone between, go to their LinkedIns, go to their Facebooks, and really see that do you have a common connect, because warm intros really work, because it's all about building trust. It's a sales cycle, and sales is all about trust building. So we've discussed about clarity, we've discussed about reach outs. Now coming to P, positioning and pitching. See, pitching is one thing which very few entrepreneurs have actually mastered. Do not give them a lot of junk data. Create a pitch which is extremely clear and at the same time very, very focused in terms of how can you help your investors make money. The most important decision, and see, it's all about helping, and investors want to understand 1,000 reasons why they should say no to you. You just need to make sure you do not give them any one reason for that. And the only way to do that is your understanding about your customers, your understanding about your financials, your understanding about your product, your understanding about all the stakeholders involved, and at the same time, your team. Display confidence, display trust by your team. Make sure that as USP of a product, USP of the company should be written down. And at the same time, when you position and pitch a company, make sure your corporate governance, your structures, your private limited legal structures, taxations, there should be no finding while doing a due diligence, because that leaves a blemish which nothing can overturn. So make sure that at your positioning, your pitching, the way you talk to investors, you should do mock reviews of your pitching with a lot of entrepreneurs. Take feedback, do mirror exercises, and pitch well. Continuously pitch well. And I still remember my day at Y Combinator demo day, and I had to pitch in front of 500 of the most amazing investors in the world, like Vinod Khosla, Paul Bouchette, and a lot of amazing people. And I still remember I practiced it over 1,000 times in front of the mirror. And the whole idea is practice your entire pitch as much as possible. Make your pitch very, very, very clear and at the same time visually appealing. And the last part, which is focused closing. And now what happens is you have to build the way we build lead funnels for sales. You start building lead funnels for investment raises. Talk to as many people as possible. Follow up, reach out, and understand the language of VCs. Understand the language of investors. If an investor does not say no, but is not investing, that means he's saying a no. So make sure you do not be overly oppressive or defensive. Make sure you are extremely forthcoming with your weaknesses. At the same time, give them confidence that you will be able to figure all these out in the coming months. And when it comes to focus, make sure that you reach out, you close the deals, take the money in the bank. It's not you have not raised capital until money is in the bank. If everything else is just a plain piece of paper. So make sure that you don't rely on term sheets. Make sure you respect confidentiality of your investors, and at the same time, be focused, razor focused, and take a month or two and just work extremely hard, pull out all your resources and raise capital. And while raising capital, always remember, do not be penny pound foolish on valuations. Do not be penny pound foolish on a lot of things. Make sure that you are very, very flexible. You are extremely cautious and cognizant of the value that you are adding to your investors. And once the investments are raised, be very transparent, be over communicative. Investors love to understand what's happening. Even if bad things are happening, remember, out of 10, only one investment needs to work for them. So even if bad things are happening, there's no problem. But as long as you communicate with them, make sure you keep on communicating with your investors what's happening, what are the updates, and how can they help you, because your investors can become your partners in actually growing the business. So hope this helped you out, and make sure that at raising funds as the CEO of the company is one of the most important priorities post building a very valuable product.